Okay, welcome to today's webinar presented by Clear Title on FinCEN, the Residential Real Estate Reporting Rule. My name is Tiffany Hobgood. I am the Vice President of Operational Growth here at Clear Title. I have been a title industry leader for more than 30 years in the industry, supporting real estate agents and their clients. I'm also a past president for both the state and national escrow associations, and I strive to make escrow and title approachable, practical, and relevant for agents in the field. I've spent my career helping agents navigate complex transactions, avoid deal-killing surprises, and understand what's happening behind the scenes so you can show up confidently for your clients. From fraud prevention to smoother closings and creative problem solving, my focus is always on protecting your reputation, strengthening trust, and helping you deliver a standout client experience. I'm so excited to be here today. So please feel free to utilize the Q&A or the chat throughout the presentation. I will do my best to pause and answer those questions as we go throughout the presentation. And then, of course, we will have a time at the end for questions as well. So we're going to dive in today to FinCEN's new real estate reporting rule. I'm not sure if any of you have had any experience with that yet or had any closings that have already had files that have qualified for FinCEN reporting, or if you're even familiar with what that rule is. Feel free to comment in the chat if you've had. But today's agenda, we're going to talk about who is FinCEN, or the Financial Crimes Enforcement Network. How did we get here? Who is responsible for reporting? What transactions qualify for the new rule? What information is being collected? And how is Clear Title making this simple for you and your transactions? And why you are instrumental in that process. So let's dive in. FinCEN, the Financial Crimes Enforcement Network, is a bureau of the U.S. Department of Treasury, established in 1990. And they're here to combat money laundering and other financial crimes. They collect, analyze, and disseminate financial intelligence. They also promote national security through financial transparency. FinCEN implements the Bank Secrecy Act and other anti-money laundering regulations across various industries, including real estate. They partner with law enforcement at all levels of government and coordinate with other government agencies. As you can see here, we've listed several that they partner with. Now that we have a little background on who FinCEN is, let's talk about how we got to where we are today with this rule. It started with the geographic targeting orders, also known as GTOs. If you've closed in other states, you may have heard of these. They initially launched in 2016. They began in Manhattan and Miami, targeting primarily cash transactions that were higher dollar for entity buyers. The GTOs were temporary and they renewed every 6 months, but they expanded over time for what FinCEN considered to be high-risk metro areas. Throughout 2016 through 2025, the coverage increased to 59 counties in 13 states, plus the District of Columbia. Each area had varying price thresholds for their reporting requirements. During this time, the GTOs provided the following data from those transactions, which is why FinCEN has continued doing that reporting. 7% were linked to FBI investigations. 27% were linked to drug investigations, and 40% matched suspicious activity reports. So as you can tell from the data, the reporting was producing very vital information for FinCEN, and That is why they found illicit behavior within real estate or bad actors. So the core goal here is to deter money laundering through transparency and requiring disclosures of true beneficial owners. So what's different now? What's different now is this is nationwide coverage. It's all 50 states and not just in targeted areas, which includes DC, Puerto Rico, Indian lands, and it's no longer a threshold for price. It is now $0 and up, where it was specific targeted. I want to say one of the areas, like was Baltimore, was 50,000, and other thresholds were 300,000 before. Now it is $0 and up. So even if you're just doing a deed that qualifies, you could have reporting requirements. And it's beyond just cash. It's what FinCEN considers non-financed. And we'll get into what that definition is, because that's not what we think non-financed is. It's capturing seller carrybacks, private financing, and much, much more. We will definitely get into that so you can help to understand what that means for you. Now, FinCEN has also created a waterfall of people who may be responsible for reporting, where before the GTOs, it was the title company who was responsible for collecting the data and reporting to FinCEN. They want to make sure that they have captured many different people who might be responsible for collecting this data and report it to FinCEN. So who might that reporting person be? They have defined that as a person who engages as business of real estate closings and settlement services within the United States. So you yourself would have to decide if you fall within one of these definitions with FinCENs. But at the top of that waterfall is the closing and settlement agent. We are responsible. We have been charged with FinCEN's requirements to collect this data. A lot of people have a misnomer that this is a title company or escrow company who is trying to collect this additional data, and we want to hold on to this. That is absolutely not the case. We have been charged by FinCEN to collect this data on their behalf based on this new regulation and this new rule. They've also, again, listed a cascade of people. If there isn't a closing or settlement professional within the transaction, then it's the person who prepared the settlement statement. If there isn't someone who prepared a settlement statement, then it's the person who filed the deed. If there wasn't a deed filer, then someone who issued the title insurance. And then as you can see, it goes down to whoever dispersed the greatest amount of funds, and then someone who evaluated the title, and then down to someone who actually prepared the deed. So they have really thought through this very extensively on who could potentially be touching real estate transactions to report the information that FinCEN is requiring of what they feel could be potential for them to capture money laundering in real estate transactions. Now, there are significant penalties for non-compliance of this rule. That is a big change from the GTOs. There weren't serious consequences with regards to the GTOs. However, this new rule definitely has some serious consequences. Bottom line is, I don't know about you guys, but I absolutely love my job and what I do on the day-to-day. And I know that all of my escrow professionals absolutely love what they do for you and your clients day in and day out. And none of us want to have any kind of civil or criminal penalty for not complying with what FinCEN is requiring based on this new rule. So unfortunately, an escrow is unable to close if we are not able to collect the required information if a transaction qualifies. And we're going to go through what that is that would qualify a transaction to be FinCEN reportable under the residential real estate rule. So what is that? There are three boxes that have to be checked, and all three have to be checked in order for a transaction to be considered reportable under the FinCEN residential real estate rule. Number one, it has to be considered what FinCEN qualifies as residential real estate. Now, throw away what you've always been taught or what you know as residential real estate. That is not how FinCEN defines residential real estate. They have defined it very differently than what we know it today, and we're going to go over what that is. And we've also gotten some new FAQs that even kind of clarify their definitions. So that could change over time, but as of today, we're going to talk about what that looks like. Then it also has to be considered non-financed. And again, throw out what you know about what's non-financed. That typically just means cash. But FinCEN has a very defined rule on what they consider to be non-financed. We're going to go over what that is as well. And then the last thing is it must be an entity or a trust buyer. So if you have an individual buyer, it is not a reportable transaction. So all three of those conditions must be present in order for this to be a reportable transaction. So what qualifies as residential real estate? Number one, single family homes. That's your traditional residential real estate transaction. That is your 1 in 4 family property. Now, vacant land. Vacant land, and zoning, by the way, doesn't have really anything to do with any of this. If it's residential zoning, commercial zoning, doesn't have anything to do with it. So take zoning aside. Vacant land. We're looking for what the intent is for what they are going to use the vacant land for. So that's why vacant land qualifies here, is what is the intent of the person who's purchasing the vacant land? Are they going to be, if they're a piece of vacant land, do they intend to subdivide it and build residential properties on it? Are they buying a single lot and this person intends to build their future home on it? That would be considered reportable. Vacant land that has an unaffixed mobile home. We would need to know if that person intends to affix that mobile home at a future date, because that would then be considered residential land. So lots of questions that we would need to ask a person who's purchasing vacant land to know if it becomes reportable. Then you have your residential units designed for 1 in 4 family. So anything that is under 5 units would be considered residential in FinCEN's rule and would be reportable. So you've got your condos, your townhomes, your duplexes, your triplexes. So anything less than 5 residential units or mixed use would be considered residential units. And then, of course, you have your cooperative housing. They have looped that in as well. Your co-ops, those would be considered residential as well. And so manufactured homes, we touched on that a little bit. So you might ask, how does that fit in here? Few questions. Again, we're going to be asking lots of questions when it comes to manufactured homes. What triggers the reportability is the transfer of a deed, or in the co-ops, the transfer of the stock certificate. And so with manufactured homes, it all comes into, is it affixed or unaffixed, and is there land transferring with it? If it's a mobile home only situation where there's no land, that's personal property. That's not real estate. That's not residential real estate. So that would not be considered a FinCEN transaction. But if it is a mobile home transferring with real estate, we need to know what the, and it's unaffixed. If it's already affixed, it's already residential. But if it's unaffixed, we need to have the questions asked of what their intent is to do, or are we affixing it as part of the closing? So lots of questions there to be asked when it comes to land. Let's pause in to see if there's any questions in the chat. I don't see any, or in the Q&A. Feel free to use that chat box as you go, or that Q&A. What about an RV on owned land? So once again, if RV is usually personal property, so unless someone intends to affix a property, then it would be considered vacant land. So what does somebody intend to do with the vacant land? Future is what we're going to be asking. Those are always what is intent to do with vacant land. So unless an RV, which is currently because it has the wheels, intends to be moved, then we're going to be asking like, what is their intent to do with that? It's always about intent. We also, and most companies are going to have this, but Clear Title will have this. We have a form of your intent. What is your intent to do with the vacant land? So what is I intend to not build on this property. And that's a reasonable reliance with FinCEN. There is a reasonable reliance standard where the reporting person can rely on the buyer of the property to let us know what their intent is to do with that property. My intent is I don't intend to build. So we can rely on that for reporting with FinCEN. If FinCEN ever comes back and asks why we didn't report, we can say, well, the buyer informed us they didn't intend to do this, so it didn't qualify. So, you know, that has a room built on it. So is it a fix or not a fix? So that'll be questions. So I probably want to ask some more questions from you, Nancy, on that. On what does that look like? It's all about, is it a structure that's fixed to the property so it can't be removed or moved? So I'd have more questions for you on that. Would love to chat with you offline on that as well. Feel free to reach out to me. So we can have that question. But great question, by the way. So lots of things, let's see, I saw another, I think I saw another thing pop in. If the seller is a person, so if the seller is an individual, they do not qualify. And we're going to get into that too, as far as an LLC. So we're going to get into what's required for reporting for the LLCs as well. So it's coming up here. So this is what qualifies as residential real estate. So now what qualifies as non-financed transactions? FinCEN has broadly defined what's considered non-financed. Throw out what you know about non-financed. In my world of the many years I've worked in escrow, behind a desk, non-financed security instrument. If you had a security instrument, it was considered financed. However, in this new rule, that is not the case whatsoever. However, if you have a traditional lender like a bank, a regulated credit union, large mortgage companies, those would be considered financed. Basically, what FinCEN is looking for is that the parties have anti-money laundering regulations in place. Those large banks, credit unions, and so forth have those obligations in place, and we'll be reporting to FinCEN how all the funds that the parties are using to purchase the property are being utilized. So when we are looking at, you know, a seller carryback, private lenders, hard money lenders, we need to confirm, usually with the private and hard money lenders, do they have an anti-money laundering or suspicious activity report obligations in place to waive the FinCEN reporting requirements? If they do, then this box would not be checked and reporting would not be required. Now, Clear Title is maintaining a database of lenders that confirm that they either do or do not have anti-money laundering or suspicious activity programs in place to help identify whether or not these transactions are reportable very early in the process. So do know that we are maintaining that. But ultimately, what we're going to need to do is we go through, when we get a transaction in, we're looking through whether the transaction qualifies. If we have a private or hard money lender, we're reaching out right away. We're asking the question, do you have an anti-money laundering or suspicious activity obligation in place that's required by FinCEN for this new rule? If they do, your transaction doesn't qualify. If they don't, and we're dealing with an entity or a trust buyer, then this may qualify. So just know that we're doing some of that legwork, but you just need to understand what the rule is, because we're going to talk about preparing the buyer and seller at the very beginning in the transaction of whether or not they would need to qualify. So there's a question that came in, does a seller carryback on the second fit under FinCEN? The question becomes, is what type of financing is the first and who are the buyers? So if the first is a traditional lender and your buyers, then it would not qualify because a traditional lender is not considered non-financed. So that would be my question, Kirk, for you is what is the first type of financing? And is your buyer an individual or an entity? Because that would be the question. So there might be a couple of questions you would need to confirm on whether or not your transaction will qualify. 1031 exchange, Sherry. 1031 exchanges are not exempt if they are not obtaining any kind of traditional financing, if they're just straight doing cash. The only type of 1031 exchange that is exempt from FinCEN reporting is a reverse 1031 exchange. That's the only type of exchange that would be exempt from FinCEN reporting. So now let's talk about going into the third check box, because now if you've determined, number one, the type of property, number two, is it considered non-financed? Number three box that you have to check, the last box of determining if your property qualifies for FinCEN reporting is your buyer a reportable entity and legal entity or a trust? Or is your buyer exempt because they are an individual? That's very important. And why it matters is that FinCEN believes that that they have seen in the information collected that frequently LLCs and trusts are used for protection and for privacy. And this is where they can see that some of the money laundering is happening. And that's why they are collecting information from those individuals. So all three of those boxes have to be checked in order for your transaction to qualify. So just to clarify, it has to be considered residential real estate. It has to be non-financed, and then it would have to be an entity or a trust in order to qualify for FinCEN reportability. So if all three of those fit in, then it would be considered reportable. Now, let's say that your transaction is now considered reportable. What information is going to be collected? Now, there's a lot of questions that come up of whether or not this information that's being collected is public. This is not public information. This is privately held by FinCEN directly. Now, I know a lot of people say, okay, but it's the government, yes, but FinCEN is not making any of this information available to the public to search. So do know that. Some may remember last year, as part of the Corporate Transparency Act, FinCEN required that U.S. entities file their beneficial ownership information. That requirement was removed in March of 2025. This rule, however, is capturing that information with the beneficial owner information that has to be filed with this new FinCEN residential rule. So what is being collected from the buyer as an entity? We're going to get into the trust in a moment. Quite a bit of information, which is why we want to make sure that the buyers are prepared up front if they know they have a transaction that qualifies. Obviously, the entity will give their legal name, if they have a doing business as, the principal business address, and it cannot be a PO box, it must be a physical address. If they themselves don't have a physical address, then whoever takes their service of process is who they would use as their address. Their tax identification number, whether that's their IRS tax ID or their foreign equivalent, if they're a foreign entity. Then they need to provide their beneficial owner's information. Anyone with substantial control and or 25% ownership, their full name, their date of birth, their residential address, again, no PO boxes, their citizenship, and their tax ID numbers or foreign equivalent if they are a foreign individual. And then, of course, the authorized signer who is signing and confirming this information and their capacity. And if a lot of people ask, well, what is considered substantial control? Hi, everyone. Sorry, I lost internet connection. Let's get back where we were. Let me reshare. Well, thank you guys. I'm so glad to be back. Oh my gosh. Okay. Okay, great. So now we're going to dive back in on what we were talking about with trust buyers. So trust buyers, there is a little bit more information that we need here when it comes to trust buyers. Trust buyers, we need the full name of the trust agreement date, whether it's a foreign equivalent, the tax ID number, and the revocability status. And revocability matters because it determines who the beneficial owner is. We're going to need the trustee's details. So who is the trustee? If it's an entity, then we need, of course, the BOI that breaks down the entity information. If the beneficial owners are individual trustees, then we need their individual information, their full name, their date of birth, their address, their citizenship, their tax ID numbers, and so on. Whoops. And then, of course, who is signing, their name, date of birth, address, and their capacity and how they act. And again, the trust is again drilling down who the trust is, and then who are the beneficial owners under that trust. And then, of course, who's signing on the capacity for the trust. So just breaking down that information. So now let me just see if there's any questions here. I'll break for that. Okay, so we're going to get into sellers. Yes, they will ask for information for sellers, so we do need to prepare the sellers for that. Substantial control. So if I cut off before I was talking about substantial control, I will go back to that slide. So substantial control is anyone who is a senior officer, a board appointee, decision makers, whoever is making the decisions for the financial matters of the entity. Or when it comes to the trust, whoever's making the decisions for the financial matters of the trust. So if that particular trust has an LLC who is actually the trustees of that trust, so whoever is in substantial control of the funds of the trust, again, that's going to be who you're going to be disclosing for the trust as well. It may not just be a mom and pop trust, it may be a different kind of trust. So you're going to be disclosing who that information regards to the beneficial ownership of the trust. So hopefully that helps. So with regards to sellers, yes, FinCEN is collecting information from sellers as well. Now, the good news here is it's not as detailed of information as they're collecting from buyers. Now, they're just wanting, and honestly, it's not any more information than we are giving to the IRS when it comes to 1099 reportability. Maybe just a little bit more because we are giving all sellers information when we're dealing with individuals as opposed to just whoever the reportable party is. But it's not too much more information. They're not digging into beneficial ownership when it comes to the seller. They just want to know who's the seller and all the sellers, not just, the main party. Who is the seller? What is their date of birth? Their current address, and again, no PO boxes. They want physical addresses and their tax ID number. Same with an entity. Trust, it's a little bit more. They want another layer. They want the actual trust information and the trustees. But the reason why they want the seller's information is they need to capture a whole picture of the transaction. They're really looking for potentially where they're seeing the same buyer and seller in transactions. Are they seeing that there is, some things going on where maybe the same parties are purchasing and selling types of transactions? That's where money laundering and bad actors can get involved. So they're looking at something as a whole across the whole United States, not just here within Arizona. Are most of our transactions like that? No, of course not. But they are looking at everything as a whole. So that is why they need a complete and total picture of the transaction as itself. They're also not asking us to show where the seller's funds are going to. Now, we will get into payment documentation here in just a minute because they will want that from the buyer on where all the sources of their funds are coming from to pay for this transaction. Subject to transactions. So yes, I mean, if we're dealing with, this is in the Q&A, the question is this rule expected to affect a subject to transaction? The lenders being able to see a change of ownership on the FinCEN website. I mean, I'm not sure if those lenders are going to have access to what's in FinCEN's website. That is not information I have knowledge of at this time. But subject twos could potentially be subject to FinCEN reportability, depending on, I would say that is not it's considered non-financed. And if you are an entity or a trust purchasing, then it would be considered reportable. So that would be those with the subject twos. Let me see if I have any other questions that I can answer. Okay, I think we answered all of those that are in there right now. So now let's go into the payment details that are also being collected. So in addition to the BOI from the buyer and then the basic details from the seller, just when you think you've completed everything, yeah, we need a little bit more data to provide to FinCEN. Because of course, after all of this, they're looking for money laundering. It's important to know where the funds came from when we're sourcing the transaction. So the purchase price, all the amounts that were paid, even if there's amounts that were paid direct and outside of closing to the seller, that has to be disclosed in the total purchase price. Assignment fees, although those are not included in the purchase price, they would be included in your total amount paid when you're giving each of the payment details, because of course those are funds that come into escrow, whether it's through your private lender or through your direct funds, those will be cash payments that are disclosed as far as the funds that come into escrow. Now, does it say that it's an assignment fee specifically? No, it just shows that those are funds that came into the escrow. The borrower will need to provide payment details for each deposit they provide. They'll need to provide their financial institution, their account number, and this is very important that they provide those details because typically when we're receiving wire transfers or cashier's checks, we don't know all of the details. With a wire transfer, some of the information is redacted, and so we need the customer to confirm all the information that we have. Now, we can validate and verify some of it, but we also want the consumer to verify it for us. When it comes to a cashier's check, we don't know what bank account those funds were drawn from. So we have to rely on the buyer to provide us with the account number from that bank that the funds were drawn from so that we can report that to FinCEN. They want to know exactly where all of these funds came from. So if we got a cashier's check for $100,000, we need to know exactly which bank account that $100,000 came from. If we are getting gift funds, if we're getting third-party funds, those also have to be disclosed and exactly what account number those funds came from that third party. So they will also have to give us those banking details so that those can be disclosed as well. For your private and hard money lenders, your escrow professionals are coordinating directly with those parties for their banking details because those also have to be provided to FinCEN of their account numbers and their banking institutions as well. So lots of information that we have to provide to FinCEN so that we can make sure that we are disclosing all of the funds that are coming into our transaction to complete and facilitate the closing. I don't see any other questions. So how are we, now that we've covered all the details and discussed the information that's needed to be gathered before the transaction can close, how is Clear Title protecting the client experience? By keeping the reporting simple and seamless, our process gathers what's required efficiently and keeps your transaction moving forward. We've aligned with FinCEN Real Estate Report. Necessary information can be completed in as little as 5 minutes. After our escrow professionals reach out to confirm with the parties that their transaction qualifies for FinCEN reporting, they will receive a secure link. The parties will be able to submit their information directly through FinCEN Real Estate Report's website. It's secure, it's dynamic, so only the fields that they need to complete based on whether they're an entity or a trust will be presented to them. And the data is collected and filed directly through the system. It's great. It's simple. We've noted that a seller can take as little as a minute. A very simple entity can take anywhere from 3 to 5 minutes. It's been very quick. It's been very easy in the things that we have seen over the last few weeks in those closings. What's also great is they have great helpful videos on their website to be able to guide the real estate professionals, the buyer and the seller, exactly what they need to do to complete that information. They have a live chat support to be able to guide them as they're filling out the information, answer any questions on what would be considered to be their beneficial owner, how do they fill that out, what do they need. They also have live assistance available at any time where they can pick up the phone and call them and also guide them through what is needed. And why does this all matter? Well, it's a rule that requires that we complete the data, but we're trying to make this as simple and absolutely secure because it's a lot of information that needs to be collected. We certainly don't want to hold on to that MPI, which has to be held for 5 years as required by FinCEN compliance. And then, of course, it has to be filed within 30 days of the actual closing with FinCEN in order to be compliant. And now we have that all done so we can make sure that this is taken care of. Now, if you're a repeat customer for us, or if you have investors who are buying repeat properties, we have that taken care of as well. Our system will be able to maintain that information that you've already entered once in this system. So you do not have to enter that every time you have a closing with clear title. So the system will be able to hold everything except for the payment details. And then we'll be able to add that to your next closing if you have a FinCEN reportable transaction, so that you'll just have to click on the link, review your details, make sure nothing has changed with your beneficial ownership information, and then add your payment details for that specific transaction. So it makes it even simpler and easier for the second or third or fourth transaction that you close with clear title. So I do see some questions have come in. Let's see if we can't answer those. If I'm putting a property I own under my name to an LLC, also owned by me, do I still have to report? Well, that depends on whether or not anyone within the reporting waterfall is helping you with that particular transaction. So that's where you need to decide when you're doing that, is there someone within the reporting waterfall that would need to report to FinCEN? Because technically, the deed itself, the recordation of the document, is what is going to trigger the reporting and into an LLC with non-financed, because it is, the threshold is 0. So it doesn't matter if there's any money exchanging hands or not. That would be considered reportable. So the question is just going to become, is someone within the waterfall of a reportable entity handling that for you? So that would be the question. And you would need to define that, or the person who's handling it determine whether or not they would qualify and have to report. Yes, yes. So Heather Ann, thank you for answering that. Yes, repeat customers can be saved. So we're very excited about being able to offer that. And I'm really excited to be able to do that. That's going to make it easier. We've actually had several customers actually be able to do that already. Very, very exciting to be able to have that ease of use with this particular customer for sure. So lastly, let's talk about why this matters to you as the real estate agents. I mean, you don't file, but you are absolutely still essential. We handle the reporting and the collection of the data, but you are the first person that the client hears from. You're their trusted resource. And so you safeguard the client experience. And that starts with you giving them all the information, letting them know whether or not their transaction may qualify in the beginning, and that they could expect that they're going to have to fill out some information. All parties are affected, both the buyer and the seller in these reportable transactions. I think what we've learned over the past couple of weeks is that some of the buyers are okay with it. Some have experienced this in other states where the GTOs have been in place. Um, and then we have the biggest thing is the sellers. The sellers are kind of taken away by why they have to also report when it's the buyer who triggers the reporting. I think it's kind of similar to FERPTA. You know, the seller kind of triggers that reporting, and the buyer is kind of like, why do I have to do it, right? Kind of the reverse, where the buyer triggers the reportability and the seller also has to give up some information. So education early really gives a smoother transaction. So discussing that with the buyer and seller at the time of the transaction when it's being signed really is going to build credibility and trust between you and your client. So when your escrow professional calls them after escrow has been opened to let them know that their transaction is reportable, they will already be prepared and ready to go. And those reportings will be quick and easy, and they're not going to hold up closing. You're not going to have someone who's going to put their foot down and say, I'm not going to do it, because escrow will not be able to close without that information being completed. There are too many penalties that we can't risk that. We can't risk having those penalties being assessed to not only our company, but the escrow professional themselves could also be penalized, which we would not want that for our people. So lastly, we have some incredible resources available. I'm going to drop the links if I can. I'm going to try and copy and paste these into the message panel here. We've got some great resources on our Clear Title. First of all, our Clear Title website is an incredible resource for you. We've also got the FinCEN website is an incredible resource for you. That's where all those handouts I dropped in the very beginning were from. And then, of course, the Real Estate Report website has all of those great videos that I was talking about. And other resources for the buyer and the seller. Please check those out. If you have any questions, we're also here as an additional resource for you. I'm happy to have conversations with you guys as well. So is anything we can do for you and help you make it smoother, or if you have questions specifically, we're happy to have those discussions. Otherwise, if there are any questions, I'd like to open that up for some more Q&A or any other questions. I don't see any Q&A. And I don't see any questions currently that I haven't answered yet. But feel free to drop those in if you'd like. I think I got all of those answered. And again, sorry about the internet dropping. That was unexpected. I'm like, oh, where'd everybody go? But thank you guys for hanging in here with me. I don't see any other questions coming. Oh, wait, I do see a few that are popping in now. If the seller is a person and the buyer is an LLC, does the buyer have to register? Yes. So the seller is not the one who triggers the reportability. The buyer is the one who triggers reportability. So again, ask yourself the three questions. Is the transaction considered residential real estate? Is it considered non-financed? And is the buyer an LLC or a trust? If all three of those trigger, then yes, this is considered a reportable transaction. And if you ever have a question on whether or not your transaction could be, reach out. We're happy to walk through that. It's my absolute pleasure. I'm so glad this was helpful for you guys. We just want to be a great resource to you to make sure that you are informed so that your customers can feel smooth and simple throughout the whole process. We want to make sure that this is seamless for them. This just feels like this is just another part of the transaction as a whole. So absolutely so glad to be here. We also know that this is going to probably evolve over time for sure. So, you know, it's probably going to be like, if we're going to get clarification from FinCEN on things that will change from time to time. But the rule itself is set in stone. It's been in place since 2024. But clarifications on what their definitions mean have come out from, we just got 100 FAQs last month, which helped clarify some of the different definitions. So we're here to help you be the best that you can be to your consumers. So thank you guys so much for being here. We appreciate you so much. And if there's anything else that we can do for you here at Clear Title, please let us know. Otherwise, have the most amazing day, my friends.